But Mayuresh Joshi is fund manager at Angel Broking. He's here to give us a broader sense of the markets and the direction in which they're headed. Good afternoon, Mayuresh. How are you doing? It's great to have you with us this afternoon. Tell me, because the Fed's decision is just around the corner now, and we are seeing the strength of the US dollar, which has kind of gained, but so has the Indian rupee. Now, that is having a bearing on IT stocks. Now, the way the Fed decides today, and obviously all indicators suggesting that there will be a rate hike, but the momentum of rate hikes from here on is something else that the markets will be watching, Mayuresh. What's the sense that you're getting, and how much is this going to impact the rupee-dollar equation, and how much of that, in turn, is going to impact spaces like IT?
Afternoon, Vikram. So largely, I think the rupee has been appreciating on the fact that the strong mandate received by the BJP government in the Uttar Pradesh or the state elections. Secondly, I think in terms of what will happen on the Federal Reserve side, largely the markets have gestated a 25 bips coming through in tonight's policy action that will get announced. And the trajectory thereof is close to 2 to 3 hikes for the remainder of the year. Having said that, can there be a short-term moment towards the dollar and dollar-denominated and backed assets? Absolutely possible. But in the larger context of things, my entire sense is that it's only a matter of time that FPI, FI flows resume back. Indian economy like India, where the political and economic stability looks far leaner now in that sense. And again, I think that the mandate has been given to the government. I think the strong push through by the government will very well continue over the next couple of years. So largely, I think the markets are bracing themselves for a hike and 2-3 hikes in terms of the commentary going ahead. There can be a short-term movement in dollar-backed denominated assets, but I think that flow and the reversal in terms of how the flows can come back into a commodity like India can hold on. Again, the 10-year on the dollar or the US markets, I think, is something to be monitored for. It's around 2.59% at this point of time. So I think the financial markets in the US are also cognizant of that fact, and so are the world markets. So I see that event to be past us once the action is announced. You probably can have a knee-jerk reaction, but it can be very minor. I think the markets probably are in fine fettle at this point of time, with strong liquidity and sentiments pushing it through. The valuations on the Indian context remain on the higher side from an FY17 earnings perspective.
Sure. Mayuresh, a pleasure always having you on air with us. Just your quick reaction. You know, one of the things we were looking at very closely was what was coming out of the Karnataka budget. We've seen Siddaramaiah lifting VAT on wine, beer, wine, and of course hard liquor as well. Some buzz that's been growing in the liquor space. But quickly, your reaction to that, and also any opportunities you see going forward.
No, again, sentimentally positive, Fatima, on the liquor space as a whole, but the context here again is how raw material prices are moving. The ENA, or the extra neutral alcohol prices, had been trending downwards, and it was a matter of time that liquor companies needed to take price hikes. Because of the past few months, we've actually seen raw material cost, specifically on the ENA front, which had remained subdued, moving higher. So I think price hikes were the only option for liquor companies to probably improve their realizations going forward. And largely, again, I think it's a volume growth story. So largely, I would have a very selective call at the sector at this point of time. But I think there are much better sectors to probably look at in terms of what mandate has come through. I think investments into infra, power is something that we'll still like from a return perspective. So I think there are better sectors than liquor stocks at this point of time, which can give a compounded return to long-term investors.
The softening of rubber prices is having a bearing on tire stocks, like I was just telling our viewers. Mayuresh, do you see more upside over there, or do you think we are peaking out?
No, again, Vikram, I think natural rubber, synthetic rubber, nylon cord form important components in terms of how the raw material structure stands out for tire companies. Secondly, the entire aspect for the Indian tire makers were how the Chinese dumping was happening specifically in the replacement market, and specifically on the truck and bus radials. And now those shipments post demonetization have come down drastically, and that has aided the Indian tire makers significantly during this demonetization, remonetization phase. Third, I think in terms of the natural rubber prices, which had hit an all-time high over the past few months of 160, 162 odd rupees per kg, have come down to almost 149, 150 rupees a kg. So that does provide a glimmer of hope in terms of rubber prices staying around these levels, aiding margins, and a few companies have taken price hikes. So as demand starts coming back post the remonetization phase, and as volumes activity starts picking up, both on the heavy commercial vehicle side, the light commercial vehicle side, and even on the replacement market, which includes the PV market, my entire sense is that the tire companies will benefit through operating leverage coming through as volumes increase both on the original equipment manufacturing part as well as margins improving on the replacement part. So if rubber prices stay around these levels for the better part of the next few months, the margin story shall play out. And again, I think the earnings story shall play out. So I think it's a natural reaction that you're probably seeing. JK Tyre is something that I like, but investors holding on to stocks like CEAT, TVS Sri Chakra, MRF should continue holding.
Mayuresh, just a stock I want to focus on another sector is a Biocon, because we've seen has been zooming ahead as its partner has settled that litigation with Roche for a key cancer drug. Remember, that was very much in the news. The move removes the legal overhang for the drug and also makes the management rather bullish on its biosimilar portfolio going forward. Just let's first hear out what Kiran Shaw had to say about this.
I think that's the big news, and also that the costs, which are generally quite huge, when you think about these kind of litigations, not only are they long but also expensive, that is also out of the way. The global opportunity that we are targeting in terms of trastuzumab is fairly large. It's between $4.5 to $5 billion globally.
All right, so that is the latest that we've heard from Kiran Mazumdar-Shaw. Mayuresh, coming to you, pharma is, of course, a space that we all look at quite carefully. Yesterday, of course, it was a Sun Pharma that was very much in the news. Today, we've got this bit of news that's coming out on a completely separate level when it comes to a Biocon. How do you expose, what are your sort of recommendations when it comes to the pharma space? What sort of exposure do you think is recommendable given the current environment?
Again, I think the environment is very, very sticky, Fatima, at this point of time, and one really is not sure on how Trump will react in terms of repealment of Obamacare. And again, the pricing pressures are going to be very, very evident. A lot of companies in their transcripts or in their con calls have mentioned pricing pressures probably coming through, and if that probably increases, that accentuates the kind of earnings contraction that we might probably witness on pharma companies. Having said that, I think border tax and the rupee appreciation is also something that will plague the earnings from a short-term perspective. So if you assume the rupee is staying against the dollar at the current level, the rupee is appreciated almost 1.5%, which basically means that there will be some amount of cross-currency headwind that will hit IT and pharma companies' earnings in terms of conversion when it comes to the Indian reporting standards. Third, largely again, I think in terms of their pipeline, as I've always mentioned, they've always maintained a very strong ANDA pipeline, and generics generally are lowly priced compared to the original drug, which is a copy that they've probably made. R&D costs remain elevated, and that probably has some amount of say in how the EBITDA margins pan out. Not to say the least, I think the FDA compliances and inspections that have probably happened across the sector, that has led to more remediation and remedial costs coming through, and that also has taken a hit on their margins going forward, as well as delays in terms of approvals of few pipelines for plants which have come under scanner. Having said that, probably I think from an earnings perspective, and assuming the kind of pipeline that we've spoken in terms of complex generics coming through, the niche generic players should probably benefit. So I think Aurobindo is something that I've liked. My own sense is that there are a couple of acquisitions, including Actavis, will aid them in terms of the earnings growth going forward, supported by a strong ANDA pipeline in terms of complex niche generics and the high margin injectables business, which can do well for them. So I think if I have to pick and choose a pharma company from the large cap names, I think Aurobindo Pharma is something that I'll stick with.
Mayuresh, just very quickly, because you mentioned Trump, as of now, how are investors looking at what comes out of him? Because, all of us still don't know exactly how much of the protectionist speech that he's giving is actually going to turn into real action on the ground. So in all honesty, when you're aligning yourself as an investor and somebody is also assessing some kind of, I guess, global risks when it comes to the rise of protectionism, how do you view what is coming out of President Donald Trump?
So I'm not really sure if President Trump knows himself what is going to come out when he delivers his speech, but largely again, I think it's the domestic consumption stories that probably will do the talking in perspective for the Indian markets. And again, I think if you look at the consumption drive in terms of the impetus that the budget has given for the irrigation sector as a whole, for roads, for power generation, for transmission. I think those are areas which still have tremendous amount of opportunities lying between them, the kind of order flows that can come through companies which operate within these areas itself, and the reach that it can probably have within these semi-urban and rural areas. I think the potential itself is huge. If I need to extend this argument forward as well, my own sense is that even consumers and durables, which are consumer discretionary facing industries, as the entire shift probably happens with discretionary income going up from the unbranded to the branded side of the business, I think you're going to see huge traction happening on FMCG products, on consumer staple products, auto companies. You've probably got white good makers, which include air coolers, air conditioners, over the next 4 to 5 years, and the scope there remains pretty huge in terms of the spending prowess that rural and urban India can probably witness. So again, I think the export-oriented sectors will have a huge overhang in terms of what policies actually come out, whether it's the broader tax and what quantum it probably comes through, what happens in terms of renegotiations once Article 50 is triggered by the United Kingdom, which is largely expected in the coming few days and weeks, and that can have a say in terms of how the currency movements can happen and create volatility in terms of reporting on foreign exchange earnings. So I think I'll be deeply oriented and focused in terms of domestic consumption stories, which can be the forte for Indian markets over the next 2 to 3 years. And there are plenty of stories, Fatima, believe me, that one can really pick and choose from a bottom-up perspective over the next 3 to 4 years.
So I wanted to come to you and ask you about domestic consumption as well, and that's the theme that we're picking up as we talk about one particular company called Quality. We were flashing other stocks while you were speaking as well when it comes to discretionary spending as well as FMCG product-oriented counters. Now, Quality is one of them, which is up 36% if you look at the graph over the last 1 year or so. There you have it in front of you. So it has risen quite a lot. We connected with the management as well at Quality, and this happened just earlier today, just to ask them what the key drivers are for the kind of buzz that Quality as a stock is generating. So, and also what the road ahead looks like for it. Listen to what the president of the company, Naval Sharma, had to say about this.
Based on further strategies on strategic perspective as well as on the tactical perspective, we are very confident that these margins are going to increase on. And the plan is to roll out overall around 8 to 10 variants in the categories of, let's say, flavored milk, butter, cheese, yogurts, paneer, over the next 4 to 6 quarters time. And that's what will impact the overall profitability and the margin profile of the organization.
You've heard that, Mayuresh. Now, what do you make of the consumption theme? Which are the particular stocks that you would recommend to our investors if you're looking at the domestic consumption story right now? Because that story never really died out, come demonetization or not. I mean, this was a story that has always remained intact with a few highs and lows, which applies to any sector. So at this point in time where you're saying that, look, no matter what global cues there might be, whether it's Brexit or the protectionist measures of Trump, there is always this theme to bank on. Which are the stocks that you like there?
So again, it's a large space, Vikram, as we discussed, and within consumption, I think you can also have consumer durables, you can have FMCG, you can have autos, you can have two-wheelers, you can have the white good manufacturers. So largely, again, I think my own sense is that as the entire paradigm shift happens from the unbranded to the branded part of the business part, and largely, again, as rural incomes grow significantly and semi-urban incomes as well, I think FMCG stocks should do relatively better. So if anybody's got stocks like Emami, Dabur in their portfolio, they should hold that, because the kind of distribution reach that these guys have, specifically in rural areas, I think it will start paying dividends going forward, and the cost optimization programs are working on their behalf. There are also these white good manufacturers. I think the AC penetration is extremely low, and so is the air cooler penetration. So I think there are qualitative companies within the space, players like Symphony in the air cooler space. And there is tremendous scope for semi-urban and rural areas to go up the value chain by buying air coolers first and then having the transition to buy air conditioners. On the auto space, as I said, I think two-wheelers, again, I think largely penetrated. But again, I think there remains a tremendous amount of scope in terms of selling of these bikes at affordable points going forward. And that can have a huge amount of shift in terms of the consumption theme. So I think paint stocks, I think these stocks are going to do extremely well again. I think the remonetization, demonetization saga as it gets over, the repainting demand is going to come back very, very strongly, and that's going to get a reflection on the volumes. There are tile makers which can do well, because I think as affordable housing gets into the length and breadth of the country again, I think tile makers largely should benefit in terms of the leverage playing on the balance sheet. Plywood makers again should benefit in terms of the kind of consumption demand that can drive their growth going forward, both in terms of plywood and laminate consumption. So I think there are plenty of themes to be played with. But again, I think the perspective has to be pretty long, because I think the gestation period for all these schemes to probably work on ground and get implemented will take at least a couple of years, 3 years. And again, the earnings shall start coming onto the balance sheet post 3 years. But I think selectively, all these companies can give compounded returns in excess of market returns over the next 3 to 4 year time frame.
Mayuresh, very quickly before we get into some more specifics about news developments, I want your commentary on RIL. We've of course seen how it's been one of the top gainers, of course, in trade today, and we know what that really means for the indices. Block deals very much in the news around that. You've seen a Morgan Stanley as well as a Citi hike those targets. What are your thoughts on RIL? Any specific targets and any specific ranges, I guess, that you think about when you look at that stock?
No, Fatima, so the clear disclaimer, I think we own this stock in our portfolio and we continue to remain extremely positive on the stock. The elements that were not working for RIL over the past few quarters were the huge capex that the company had embarked upon, specifically in its non-core operations, which excluded petchem and refining. So I think the telecom capex of almost 2 lakh crores did take sheen off of the earnings of RIL, and the ROEs remain subdued below 11%. But a lot of these investments or work in progress is now getting converted into productive assets. And as that starts playing on the balance sheet, the earnings growth shall become very, very evident. A few of their key projects in 2 of their main segments, which is petchem and refining, will start getting commissioned and operationalized over the next few quarters, and that will have a huge kicker in terms of their core business earnings. The EBIT should probably hold up in terms of the refining margins as well, because RIL operates in middle distillates, and middle distillates are a little bit less immune to the Singapore GRMs, which are a mix of light distillates at this point of time. So largely, again, I think telecom expected to contribute from the coming fiscal, the kind of plans that they've introduced, even if one assumes a 50% base case scenario for subscribers staying into their network. I think the kind of growth that can come through in terms of the fixed cost absorption that has already happened on the balance sheet, the leverage can nicely play out even from the telecom part over the next year and a half. So I think all the pieces coming together for Reliance at this point of time, and the earnings trajectory should improve with ROEs, which remain subdued, as I mentioned earlier, below 11%, expanding meaningfully. So yes, I think remain optimistic and positive on the stock from a long-term perspective.
All right. And even as you are talking about Reliance, there is news coming in, and this is from ANI, that the BJP's N. Biren Singh has been sworn in as the Chief Minister of Manipur. So the surge that BJP has seen in the last state elections, not really restricted to Uttar Pradesh. Now we've seen that happen in Goa as well. And as we're reporting now, it's happening in Manipur, where the Chief Minister is from the BJP, N. Biren Singh, has been sworn in as the Chief Minister of the state, continuing BJP's hold in the northeastern states as well. And moving on, McNally Bharat has won an order win for 415 crore rupees from AP Power Generation Corporation, and this for design, engineering and maintenance of 500 megawatt grid over there. Earlier today, we had a chance to speak to the management. The managing director of McNally Bharat, Srinivas Singh, had spoken to us about this order, and we also discussed about the other orders that are in the pipeline. Listen to what he had to say to us.
In the thermal power segment, we have a number of orders from NTPC and other customers, which are we are expecting by 2018, all of them to be completed. In Sayaji, we have got 4 factories in India, and all the factories are now having a reasonable amount of order booking. The demands of the equipment, those which are being manufactured by McNally Sayaj, are definitely expected to be much higher than what it was in the past.
Mayuresh, a lot is being said about the competition that is brewing between the states to up the development quotient, to build infrastructure going ahead. Certainly true in BJP states, but obviously in the south as well, we are seeing a lot of action on that count, especially in states like Telangana, in Andhra Pradesh as well, where the borderlines have been redrawn. So there is ample scope over there. In terms of government spends, when you're looking at that aspect of infrastructure, spends going up, which are the counters, which are the spaces that you would bet on the most going ahead from here, at least for the next couple of years?
So largely, again, I think if one really looks into the fine details of what the Exchequer has presented in the budget gone by, I think there's a tremendous scope in terms of the capital expenditure going up, and the infrastructure spend earmarked in the budget is substantially higher on a year-on-year basis. Having said that, my own sense is that within infrastructure, again, I think you can probably have subsets of power, road infrastructure, and probably the others as well. So within power and roads, I think substantial development and work has already taken place, but a lot more needs to be done. So I think I remain extremely positive on these sectors. But again, I think housing, power, infrastructure, I think what's going to drive them is going to be the cement consumption going up substantially. So largely, again, I think 65-70% of the cement consumption comes in through the housing and the rest from infrastructure. And as huge impetus is being laid through in terms of both these aspects in the budget and government spending coming through on both these sectors quite significantly over the next 2 to 3 years. The cement demand, which has languished over the past few years, is expected to pick up meaningfully. The utilization levels still stay around 70-75% for the industry as a whole. Huge amount of capex was done, right from 10 to 15 over the last 5 to 6 years, and that probably will start bearing fruit as demand starts coming back meaningfully, which would probably relate to utilization levels going up, realizations remaining buoyant going forward. And as operating costs go up, I think the operating leverage, because of operating volumes going up, will probably have a say in terms of the return on capital employed moving up in a gradual fashion for cement companies. So cement as a sector is something that I like, and if investors are holding on to stocks like Ultratech, JK Lakshmi, I think they should continue holding on to these stocks over the next 15 to 18 months.
All right, Mayuresh, thanks a lot for joining us on Lunch Money and really sharing your opinion and views on a host of topics that we raised. Still ahead, we are going to be discussing the expectations from the Fed later today, as we're going to be connecting with Jasper Lawler of London Capital Group to stay with us for that discussion.